All right, everyone, let's do a quick sound check here. Hopefully everyone can hear me. Let me also share my screen. All right, just a quick sound check. Let me know if everyone can hear me, everyone here in the room, as we wait everybody to join us. Hopefully everyone had a good day today, Tuesday. All right, very good. We're gonna do a live Q&A interaction. Usually what I like to do is involve everybody here. You know, if you have questions, please don't hesitate to ask your questions. I think it's important. Fantastic. Thank you, Mariana. Okay. So first, I usually ask everyone about their experiences as traders, because that way I know how slow or how fast to take the class here, the webinar. I'm going to show you a few things on price action. So just a quick, is anyone here an absolute beginner? If you can let me know, or if you've traded, if you have some experience, if you're a DayTradeToWin member already, and that way I know who's in the room. Okay, Marianne is intermediate, okay. I have Mike, Ryan, Stefan, Giannis, Glenn, Dennis, Deborah, Alan. And the next question I usually ask is, are most of you using Ninja Trader as a charting platform or TradingView? The reason why I'm asking that is because we recently have all our software coded for TradingView charting platform, and there's been a lot of people asking for the TradingView charting platform, and I want to make sure that I'm providing what the traders are using, whether it be Ninja Trader and now with TradingView. Most of you are Ninja Trader users. I've been using Ninja Trader for 14 years. I started DayTradeToWin in the early 2000s, teaching traders about price action. Some TradeStation and some eSignal also back then. It's only recently that a lot of traders that are using Bitcoin and Forex and all those things are using the TradingView platform, and I decided to expand to that as well. Ryan has TradingView. Okay. What I'm going to show you, and hopefully you all, if you're not already a member, you have an opportunity to get a free member account. We had a lot of people join the free member account, and some people had some issues in trying to get usernames and passwords. So if you weren't able to get a free member account, visit the DayTradeToWin.com and create a free member account. And the reason why I'm suggesting that is because there's a couple of resources there that are available. So for example, one of the things I want to focus on today is a way of understanding throughout the day, and whether you're using Ninja Trader or TradingView or using the E-mini or the NASDAQ or the crude oil, how to understand price action throughout the day. So here's today, a chart of today. I'm using a 1-minute chart, and I believe most of us here in the room are equities traders or futures traders. Anyone here trade any other markets that you'd like for me to also show you and explain to you? Yeah, Mariana, ES only. So I'm primarily an E-mini S&P trader. I have most of the tools that I use and I teach are focused for the E-mini S&P. But if there are any other traders that would like me to show you a different market, I'm happy to do so as well. So what I'm going to show you is a way to understand as the day progresses what to expect and how to take advantage of it. So what you see here is, for me, living in the Eastern Standard Time Zone. Here's where the market opens at 9:30. Just adjust for your time zone. And the idea, realistically, is how do we take advantage of the day as it begins? Because we really don't want to be trading right until the end of the day here at 4:15, because there are some problems with trading right till the end of the day. So we're really trying to take advantage of this here, which is considered the day session. What usually happens as the market opens? Well, we have a lot of volatility, we have a lot of action, we have a lot of movement. Now, how do I know that? Well, the candles are usually larger. I'm using a 1-minute chart, but if I add here, and I know some of you may already know this because I have hundreds of videos on YouTube and everywhere on the internet explaining how this works, but I really try to understand what's happening using the ATR, the average true range. I use a setting of 4, and usually when I set this up for traders or for new traders, even though we have instructions and videos, as a side note, when you do change this setting to 4, remember to come here to the template and save it as a default. And the reason why we want to do that is it wants to remember these are the settings moving forward. We're not going to constantly update the settings. And we can do this with any indicator. As the market opens, we're going to see here that we have this spike in volatility. Now the ATR, all it does is say how large the candles are. Actually, let me adjust here the settings here for the candles are a little bit thick, so let me adjust them. That way we can see them here a little bit nicer. What we have here is the ATR being pretty high, and all this is telling me is that the candles are large. Now, it doesn't mean you can't trade. So there's a misconception here. Can we trade right as the market open? You can. The problem is that sometimes you have a lot of whipsaw, and I can give you an example, and this is not that it happens every day, but you see that the market went down, and then it went up, and then it went down over here, and then it went down and up. You see, I'm trying to avoid these large swings and large whipsaws that could really hurt us as traders. So in reality, if we just give it a few minutes for things to calm down, then we may see more of a trend or a movement or some rationale to the market. Because remember, it's not just people that are trading right as the market opens. We have robots, we have traders that are exiting their overnight positions, we have traders that are entering for the day session. So we have a lot of activity that is just happening right as the market opens. Sometimes it's a little dangerous and the volatility may be a bit too high. Now, I think that if you keep within 5 and I would say probably about 1, if you keep the ATR within this range, basically what you're saying is every candle is 4 points, 3 points, 5 points, 2 points. You're not overextending yourself with a large 10-point 1-minute candle. So if you just keep within the idea of having the average true range and how large the candles are between 1 point and 5 points, I think that's a more rational way to trade as opposed to getting wrapped up into some crazy situation. So I like to do that between 1 and 5. Now, I do have to say that the stronger the market is, typically we have trending movement. When the market is slow and the ATR is down here close to 1, there's usually chop. So as a frame of reference, you may want to say, I understand the market is slow, it's going to be choppy, it's close to 1 on the ATR, I don't want to trade, or I'm going to wait until it moves or picks up steam. On the other hand, if you have the ATR above 5, just remember it's dangerous. Every candle is 5, 6 points. That means your stop has to be larger just to keep you in the trade, and that may be dangerous. So just remember, if you keep yourself in check with trading within this area, you know that each candle has, for example, this large red candle here is about 4.25 points. The next candle here is 4.5 points. Then the market gets a little bit slower, it's 3.5 points. So between 1 and 5. All right. Anyone have any questions on that so far? So what I want to do when I look at the day, I want to take a look at whether or not the market is making a move. If the market is pushing higher, lower, is it getting slower? Is there typically a news event? So if you haven't done so already, I do offer the news indicator as a trial. It's free if you want to download it, or if you haven't, if you need it, just send us an email to support@DayTradeToWin.com. It's called the news indicator, and some of you may already have it. So it's the news indicator. I have it on the member site, the free member site as well. And really all I'm looking for is the US news events. And what you're seeing here is on the chart, it tells me when news is coming. It gives a sound alert. So it's pretty cool. It alerts me if there's something I should be aware of. I don't have to look at a calendar, although it's always good to look at a calendar. Okay. Now, if I don't see any news that's upcoming and I want to trade, fantastic. So let me add here a couple of things. I can add here for example, the Trade Scalper. And the Trade Scalper is very popular. I know some of you may already have it. And so you see here these signals here to go short, to go long, to go short, to go long. So what is this really telling us? What does this mean? It means that the market is moving, the market is breaking out, there's opportunities. We have an exact signal, an exact price, and if I want to take a look at a specific target, what I like to use and what I recommend is looking at the ATR as a target. So if the ATR is telling me 3 points or 2 points or 4 points, that should be initially what your target initially should be. If you want to trail a stop afterwards, that's fine, but at least we have a balance of what to expect in distance. Now, even though this trade here right as the market opened was successful, I again have to advise that it may be dangerous to trade right as the market opens. We've all heard the disclaimers and the risks involved with trading, and it's true, there are risks involved with trading. So we can't always expect that right as the market opens, it's always going to go straight up or straight down. We can have some chop, and it could be dangerous because of the volatility. So we have here these signals here. This obviously is a losing trade, this long signal. You could use a pivotal stop. I like to use the ATR as a stop as well. So here's an example of a losing trade. And then you have the market giving us a short. You have a market giving us a long and a long. So you see these signals that say double wick long. That is based on the market trying consecutively with just wicks trying to go somewhere. And if the one thing that you can take away from this webinar is that markets love to test where they've been. They love to test where they've traded. So if you have a situation where the market is trying to go higher and makes a high, for example, here, and then comes back down, and then tries again a second time here, the likelihood, especially on a 1-minute chart, we're not talking about hourly or daily, on a 1-minute chart, the likelihood of it trying a third time, a fourth time, a fifth time to try to get past that and at least reach it is very good. It's a highly accurate way of trading. So we're fading the trade, we're trying to get in. The double wick is especially created for that, where you see 2 consecutive wicks. That's how the trade is created. 2 consecutive wicks trying to go up or trying to go down. You're entering at the close of the second bar, and that's how this trade works. I like to explain the way price action works. Some of the things we teach are proprietary, but I do like to give you an understanding of what's happening behind the scenes, so you at least can be prepared for it and understand what's happening. Anyone have any questions so far? Yanis, Tish, Stefan, Ryan, Mike, Jody, Glenn, Dan? Now, the emails that I get about funded accounts. So I have a lot of traders that are interested in the funded accounts, and whether you're using Apex or a different funded account, usually traders like to keep it simple. The Trade Scalper is a great way to do that. 3, 4, 5 trades stop, so don't overtrade. So if that's your goal, that's your priority, when you're looking at trying to join one of these funded prop accounts or educational schools like the prop schools, keep it as simple as possible. I have a lot of traders using the Trade Scalper with the funded accounts, and it's very simple. You follow the signals, you keep the stop close to what the ATR is. You don't hold on to trades. Another thing that I really teach is time-based stops or time elements, where you don't hold on to trades for that long. If it's going in your favor, great, trail a stop, but 3, 4, 5 candles, it hasn't made a profit, it's at break even, or it's losing a little bit, cut the trade loose. There's no reason to hold on to a trade that's not going in your favor. Okay, so we have some really good signals today using the Trade Scalper. And for those of you, I think I only see Ryan here that is using TradingView. Let me just add here the TradingView for Ryan here on the Trade Scalper. Let me just bring it up. Give me just a second here. And all right, so all of the indicators so far are available for TradingView. The one I'm going to show you right now is the Trade Scalper, but if you're interested in the roadmap or the blueprint or the multi-lines, the Atlas line, the At the Open, the ABC, they're all now available as of very recently for TradingView. So I'm going to add this here to the chart, and we should see here some signals on the E-mini S&P. There they are. All right, so we're going to compare to make sure that they're accurate. So very similarly, you see here that this trade again was the losing trade I referred to, and then you have the short, the double wick long, the double wick long, the long. So we try to make this as exact as possible, and even so, the TradingView may have a couple of extra features, not too many, just one or two extra features. So let me show you the back end here. If you're, in case you're, this is for Ryan. I think Ryan's really the only one here with TradingView, so I'm going to just share with you the back end. Again, the show to double wick signals. Do I want to take one trade or multiple trades? And what this setting is doing is saying, do I want back-to-back signals or not? Sometimes we have a clutter of signals where it's just candle after candle that says long, long, long. So usually I uncheck this because I do want to see those signals, but a lot of traders say that to keep it simple, we just have one trade per segment. And that's what that's for there. And then very simply, there's no configuration. It's, do you want to make the fonts larger or smaller? That's all it is. And lastly, do you see here the ATR? What this is doing, this setting here, is a filter. When the market is slow, we don't want to trade. So I included a filter where we as traders can say, I don't want to see any trades to go long or short if we have the ATR below a certain value, because if the ATR is 4, it's 4 ticks, 1 point on the E-mini, which tells me that we're in a pretty slow environment. If it drops below 4 ticks, there's not going to be any signals. They're filtered out. And the same thing is true with Ninja Trader as well. All right. We have some signals here and some alerts. So the white arrow or triangle that you see there, that's indicating the actual candle where the signal is generated, where you're supposed to go long at. Candle, that's what that's for. And everything is customizable as well. Okay, so that's what that is for. And again, I have to say, the signals on the Trade Scalper, you don't have to take every signal, but they're pretty good signals to enter into the market. You don't have to take every signal. I'm a big believer of not over trading, but if you have an opportunity, if you're able to get in and you're trying not to chase it, don't chase the market, then you're better than, I would say, 90% of the traders that are out there, because we don't want to wing it. We want to have rules. We understand if the market's slow. We want to understand if the market's fast. And so that's the goal. That's the idea. Now you see here there's a long, and there's another long, and there's another long. So that one trade only would eliminate that, because essentially you're trying to get in and continue to go long and long. You wouldn't see 3 signals in a row of long. You just see 1. So that's pretty much what we're seeing here. This is a huge long, and then the market came right back down. Okay, anyone have any questions on the Trade Scalper on TradingView? I'm going to switch back to Ninja Trader. Ryan, any questions for me while you have me here? You can see all the signals as they are. Okay, so let me go back here, and this is the same exact, right? Maybe off by a tick depending on the data feeds, but same exact signals. So there's no repainting, which is important. The signals are what they are based on price action. Now, I started off the webinar saying that we have to be very careful at the open. We have a lot of signals. Give it a good 5, maybe 10 minutes for things to calm down. What usually happens is the ATR shoots up, and then it starts to get slower and slower. This, what you're seeing here, is normal. It's common. Don't think that there's anything wrong with the market slowing down after it opens. It happens every day, unless there's a news event, like a news event at 10 o'clock, or a news event like FOMC, or something that propels the market for whatever reason. You're probably going to experience this all the time. You're going to see a big spike, right as the session opens, and then it just gets, as the day progresses, a little bit slower and slower. And then you have here a big spike, some news event here. So I want you to think about expectations. It's expected that the market is strong right within the first 15 minutes, maybe 20 minutes, and then it just starts getting slower and slower. So what do we do is we like to look at an opportunity. So if the market comes here to 12 o'clock and you've taken a few trades and you're still wondering, what are we doing here? What's the goal? Well, one of the methods, and if you haven't downloaded, it's available for free, and it's available for free also on TradingView, the ABC trading method. I'll add that in just a moment. It's identifying whether or not we have a trend for the day. A lot of people try to catch the trends as early as possible, and that's good if you can, but ideally there's a phenomena in the market that if a trending day is occurring, it almost always breaks the high or low, if it's a trend up or trend down, of the first 2.5 hours. Almost always. So whenever you are thinking, do we have a range-bound day, the day is typically stuck between what I call the A part of the day. This is very common. It's only when the market begins to break and continue above or below the first 2.5 hours that we can say there's a trend and something is happening. You can then take advantage of that, right? And there's a lot of different ways to take advantage of it, whether you're using the Trade Scalper, whether you're just jumping in based on the signals that the ABC method creates, whether you're looking at a support and resistance play. And really what that means is that if the market is contained within this price, look what happened as soon as it came down to this here. It immediately bounced off of it. So one of the signals that the ABC creates is a situation where the market bounces off of the lower high of the first 2.5 hours, and it gives a signal for that. It says that there's a bounce. It's considered the support and resistance of the day, like you've heard double bottoms, double tops, that kind of thing. So when I see that, I see an opportunity. When I see the market break the high of the range, I also see an opportunity. Now, there's a relationship between the A and the B. So this is A and this is B. B is also 2.5 hours. And if you haven't downloaded the course or the software on the free member account, it's available. I don't think we mentioned anything about the TradingView, but it is available for TradingView, and I can give everyone access who wants to try it. So now, between 12 o'clock and 14:30, we have what's called the B part of the day. So there's also a relationship. The relationship is if we have a late day rally or late day sell-off, it will happen within the last hour and a half or hour and 45 minutes, which I call the C. So the reason why the method is called the ABC method is because we're understanding what A brings to us: volatility, opportunity. The market has some moves. The B part of the day, always called the lunchtime, back in years gone by, it was always considered the lunchtime situation where the market would slow down. And now it may not be as relevant as that used to be, but I always look for whether or not the market bounces off of the range of A, because it could be a double bottom or a double top. In the C part of the day, we have the late day rally or sell-off where the market breaks and continues. This is the perfect time for the FOMC or news events, and it just breaks out and gives us an opportunity. Now, what that looks like as an indicator is, let me just add it here just to show you. Here are the all the DayTradeToWin indicators, and we include all these indicators with mentorship. So I think I see a few mentorship traders here in the room that are part of the mentorship group. You have all these as you see them here, the ABC, the Atlas line, the ATO, the blueprint, but I'm just going to add here the ABC. And I'm going to change the color for the middle part of the day so we can see it just a little bit better. And what this looks like is this. We have the range of A, 2.5 hours, we have the range of B, and then we have C. So really the idea is to understand what is the market doing when it comes to it hitting the low of A or the high of A. Will it continue or will it bounce off of it? And that's why you see here an ABC long, because as soon as it broke, we had an opportunity here to go long. And there's no signal here in the C part of the day because the market did not touch and reverse, right? So you're looking at a support and resistance opportunity where it comes out and comes back in, and you're not looking at it breaking like a late day rally or a late day sell-off. So this is today. Anyone have any questions on this? And I'll show you TradingView, not to worry, guys. And what you see here is the day prior. So this is yesterday. Again, if we're thinking about price action, it should be more objective than not. So A, B, and C. Remember in the beginning, I mentioned that whenever the market breaks the high or low of the A part of the day, it typically results in a trend. So that's exactly what happened. As soon as the market broke, and I'll tell you exactly what the rules are, 2 consecutive candles closing below the range of A produces a signal. It's the close of bar number 2. So if I'm going to show it to you, this is 1 and this is 2, the green candle, and I'm not sure what the price is. It's 51.67. That's it. So 51.67. So 2 consecutive candles closing above or below the range of A is the opportunity. I don't use 1 candle closing because I don't want a false breakout. So I want a little bit more proof, and that's why we have 2. And so the signal is provided to you. Close the bar number 2. Let's go short, right? And it tries to give you an exact price, but I know sometimes because the market may be moving, you're not always going to be able to get that price. So don't chase it. Within a tick, you're fine, but we're not going to go 5 or 10 points from this price, right? We're already expecting as soon as it starts to close, we're ready. So as traders, be ready, right? And so yesterday, it was a good example of the market breaking the range of A to the downside and then continuing for a huge move. Now, whether you looked at the ABC or if I add back the Trade Scalper, you're going to see lots of opportunities. So I'll add the Trade Scalper back. Where is it? Right here. And give it just a second to update. And we should see the ABC also. There it is. Okay, so we have all of these signals to go short as the day begins. We have a couple to the long side, and then we have 1, 2, 3, 4, 5, 6, 7, 8. So we have a bunch of short signals. We do have a long signal here that's a losing trade, and another long signal that's a losing trade. But overwhelmingly, without a doubt, it's all short. And if you were going to filter this, the way that I would recommend it would be to only take short trades once we realize that it broke the range of A. So once it breaks the range of A, you're thinking, well, the market broke the range of A. It means we're going to be a trend to the downside. I'm only focusing on short trends. Hey, Gene. Glad you can join us. You want to just explain the question? I'm happy to answer it. You can see that that's the opportunity. Now, when it comes here to the to the C part of the day, right, what we're waiting for is the market to give me 2 consecutive closes below the range. So if this is the range here, and this is 5103 quarter, not sure, 5103 quarter would be right over here. Let me just put it 51. I like to use the crosshair so I know 5103 quarter right there. Okay, so what is 5103 quarter? It's 2 consecutive candles closing below. 1, 2, that's the low, so it makes sense that that's the signal. Okay, and then you just hold on to it short, looking for an opportunity. Take your profit, close the position, don't re-enter the same trade twice. So I really avoid taking the same trade twice. Now you see here these signals here. This is considered aftermarket to a certain degree. It's still the day session until 5 p.m. But if you want to trade this, the only recommendation I would say is make sure that it has enough volatility to trade. So you see here on the back end of the software for Ninja Trader, it has here the ATR filter here. You see that over here is 0, right? I believe this is in points. So if I click 1, the signals disappear. This is in points. So as long as the ATR is above 1, which is 4 ticks, then you'll see a trade. But as soon as it drops below, you won't see a trade. So that's the filter. That's a good thing. We don't want to trade when the market is too slow. So if I put it to 0, I mean there's no filter. You're going to see all the trades when the market is slow. All right. You could, Gene, meant to retest of the short-long signal before taking the trade. Yes, you could. I don't see any problem with that. As long as there's nothing conflicting, right? There's nothing else conflicting there, okay? Okay, any questions on the ABC or the Trade Scalper? I know some of you want to take a look at it as well on the TradingView, so let me bring that up. So this is the version of the ABC on TradingView. It does the same exact thing. I made the text really big, and for whatever reason, some traders like it big, but you can always make this large instead, right? You can make it small. You don't have to make it that big. So this is the TradingView version of the ABC. Gives the same type of signals, long, short. It outlines the zones and so on. Does the same exact thing here. I'll go back to yesterday. So ABC short, same situation. You see that, right? Okay, so let's take a look at a couple other things. Anyone have any questions? No, it's a good question, Gene. So the Gene is asking for the ATR, if you're using a 3-minute chart or a 5-minute chart. The ATR stays the same. Let me forward this to everybody. The ATR stays the same. I would not adjust the anything with the ATR. It's still the same. Now, I'm going to just elaborate a little bit more on that, Gene. When the market is slow, you may want to increase to a 3-minute or a 5-minute chart so we're above 1 on the ATR. But if the market is too strong and too volatile, you do the opposite. So instead of using a 5-minute chart on a volatile market, you would use a 1-minute chart instead. Because we want to be able to stay within the 1 and 5 on the ATR. So more volatility, drop it down to 1 minute, maybe even 30 seconds. When you have slow conditions, then a 5-minute chart. So you can adapt to, or 3-minute chart. So you can adapt to try to keep the ATR within 1 and 5. And the rules are always the same. So it doesn't really matter. The rules are still the same if you use a 5-minute chart we're still looking at the ATR being between 1 and 5 and the signals, so nothing changes on that. All right, Gene? All right, fantastic. Now, besides that, I also want to understand when the market goes up and when the market goes down, what that means as a trader when we see these candles that are flip-flopping. So let me just remove here everything off the chart a little bit more, and okay. So when you see the market moving like this and like this and like this and like this and like this, this sometimes is really hard to understand. It's just difficult to understand, because we may look at it after the fact and say, I would have done this, I would have done that, I would have held on to it, but that's all after the fact, right? That's in hindsight. So what I want to do is I want to show you a very strong method called the roadmap. And the roadmap is intended to be what it's called, a roadmap, to help me with filtering trades, seeing if they break these zones, just a good understanding. So let me add here the roadmap, and then I'll show it to you on the trading view as well. So the roadmap here, there's nothing you have to do. It's really focused more for the E-mini S&P. There's no configuration whatsoever, and besides the colors. And what you're going to see here, it may take just a minute. Let me, yep, there it is. What this is intended, and we have a live trading room, so all members can join the live trading room, where we have and explain live as the market is moving. Should we buy? Should we sell? Why or why not? Explanations, questions. So it's a recent bonus that I put together in order for traders who are looking just for a little bit more help or assistance. You can join the live trading room Monday through Thursday. And we focus on the roadmap. We focus on the Trade Scalper. You know, we're really trying to understand as traders and helping each other out here on what we're doing, what we're seeing. So you see how the market went through these zones. And then you see how the market landed in this zone and reversed. So the roadmap, what its intention is two things. It's first a filter. So whenever it hits one of these zones, to be cautious, because it may reverse off of it. And it's also a breakout, where if it surpasses the zone, we can enter as it moves in the same direction through the zone. So if I was thinking about going long, so we're just looking at this here as an example. If I'm thinking about going long, I want to go long as it leads me to the zone like a magnet. But once it lands in the zone, it could very well reverse off of it. So I am going to look for any long opportunity, Trade Scalper, your own methods, it doesn't matter, but leading me up to the zone, or down for that matter, down to the zone. So once I'm long, I see that it trades inside the zone, and I say to myself, okay, it traded in the zone, it may not go through it, let me be very careful and exit if it turns around. Or maybe let me exit and take my profit, and if it turns around, I can go short as a counter trend. So as this is happening, the market landed in the zone and really got stuck here within the zone. And remember, this zone is plotting in advance ahead of time. So it doesn't just appear, it's already known in advance that this is the price that the market may reverse at. And it did, it reversed. Now we have a couple of ways that we enter into this type of trade. We can enter as soon as it lands in the zone and comes out of it. We can wait for a candle to close. We can wait for two candles to close, which would be too far away anyway. But the reality is, if you're thinking about going long on this candle, And if I remove this, does anyone see any reason here not to go long? Because if you add momentum, moving averages, MACDs, whatever the case may be, it will all tell you to be a buyer and to go long. Almost every single conventional indicator will say go long. But the roadmap here will not. The roadmap is almost indicating to you, be cautious and do not go long because it may reverse. So it's a filter. That's what I like to use it as, a filter and as a counter trend trade opportunity. Now let's say that it goes through the zone. Let's say that the market broke through the zone. That's an opportunity to be a buyer. So if the market lands in the zone and nothing is stopping it, as it did here, I can go long 2 or 3 ticks above the zone. And that's a perfect example over here, where as the market came down, I want to go short, leading me down to the roadmap zone. It stopped, it paused, this candle tried to reverse, and then it just came down. If you're going to go short, you would go short a couple ticks below the zone. You'd be short here, you'd be short here, you'd be short here, and you'd be short until the next zone, which is all the way down here, which had never made it, right? So then you'd wait for it to go down and you'd be short just below it as well. So the roadmap is really unique because it's a filter for counter trend trades. It's an opportunity for, if it breaks the zone, you can continue. So as we continue here, you see the market hit this, paused for a little bit. We're waiting. Do we have a signal? Because this actually gives you signals as well to be long. No signal. You're short entry right as it breaks. Couple ticks below the zone. Again, couple ticks below the zone. Opportunity. Again, couple ticks below the zone. Opportunity. And couple ticks below the zone. Opportunity. And then comes back. So as the market comes back, be very careful. It may reverse, but if it doesn't, you're going long a couple ticks above. Next zone. So it's actually, I've never seen software that really does this anywhere, where it does counter trend opportunities, it does breakouts, it shows you where you should be cautious, right? Like for example, it came down this wick, this wick right here, but it never continued. Turns around, it reverses. Looking for a long opportunity there. Now this is pretty unique. I'm going to show you now the TradingView version of the software, because there's a little bit more to it, right? Because in this version, we are looking at the zones for buying and selling. But let me just come back here to the TradingView version here. Let me just remove here the ABC. The roadmap version here is intended to give you the actual signals to buy and to sell with the stops and the targets. So this is a little bit more intricate, where you see a lot more lines, and I'm going to explain to you what these lines are. The yellow bar, or the yellow candle, is painted yellow because it is touching the zone. As soon as it breaks through the zone, it gives you a roadmap long signal to go long at the close of the candle. Okay. This here is the target. The purple line is the target, and you can change these colors as well. Giving me a roadmap long, leading me up to the zone. So again, it's a little bit different. We're forward thinkers. We're thinking the market's heading up to the zone, the market's breaking the zone, the market's reversing off the zone. And the lines that you're seeing are intended to be for buys, stops, as well as buy targets and vice versa, sell stops, sell targets. So as the market comes down here, let me just go back actually to the more beginning of a day. Because the market broke this is telling me to go long 50.99 because it broke through the zone. It's telling you go long, right? The same thing, the market broke through this zone, it's telling you to go short. And the same thing is true here earlier, where you see roadmap short, broke the zone, roadmap short. I mean, there's a lot of signals here, but really the idea behind it is, why are we going long or short? In this case, we're going short because it's going through each of the zones, just surpassing it. It's not bouncing off of it. It's giving us that opportunity. And it's these purple lines here, and I can show you that these purple lines there are in fact the take profit. I'm going to make that yellow. I think that may be a little bit nicer. Yellow. Those are the take profit. Same thing, as it breaks the zones, because the market's strong and volatile, it just gives you long after long because it's breaking the zones. And the yellow line is the target. So it almost gives everything to you that you need. A little bit different than what the Ninja Trader version does. This gives you a little bit more, but I think it gives you the same signals regardless. You're still going long, you're still going short, you're still using the ATR, doing all the same things. This just gives you a little bit more extra definition. You can turn it on or turn it off as well. Does anyone have any questions on this? Primarily used for the E-mini S&P, support, resistance, absolutely right. So this candle is yellow. If you remember, I said it's yellow because it landed in the zone and it didn't go through it. It's almost giving you kind of this alert that it touched the zone, didn't go through it, it may reverse off of it, to be very careful. And what happened? Landed in the zone and then reversed. So that yellow color is a good, just like this one, it's a cautionary to indicate that we may see a reversal. But it's more intended for the E-mini S&P, Ryan. So I'm pretty proud of this software. I have a lot of traders that are using it and are very happy with it. And they're actually using it with their own methods as well, because they're using it as a filter for their own techniques. All right, and that's the roadmap on the TradingView. Anyone have any questions? That's really the problem when using moving average crossovers. We're constantly changing the values. And so something like the roadmap or the Trade Scalper or the blueprint or the Atlas line, there's no configuration. The configurations are all built in based on price action. If the market's strong, we know it. If the market's slow, we know it. If the market is breaking the zones, we know it. If there's a signal, there's no optimization, we know it. So the roadmap, Jody, for currently, because the market's a little bit more volatile, I would use it on a 1-minute chart. If the market slows down, you can use it on a 5-minute chart, only so we can keep the distances with the ATR correct. But a 1-minute chart for right now, great, because the market's volatile. If we see a real slowdown, then a 3-minute or 5-minute chart would be fine, because we want to stay in that movement a little bit longer than just 1 minute. All right, so I'm going to end our webinar right now. I promised a discount in the email, so if anyone is interested in any of the software, including accelerated mentorship, which includes all of the courses and software, we have that package, discounted package. The coupon code is April 30 for 30% off, good through the next few days. So if you're interested in any of the software, you can use the promo code April 30. The trading room, Ryan, is Monday through Thursday, and on Fridays we have specific live training just for the methods. So if you just purchased the autopilot, or if you just purchased the Trade Scalper, it's just really more of a one-on-one with the instructor to answer all your questions. Has an opportunity to download the ABC for free for TradingView. Just email me if you need access, or go to your free member account with some instructions for Ninja Trader. You can also get any software for 30% off for the next few days as a bonus for attending this webinar.